take a look at the key risks. The key risks to me are valuations stretched? Okay. Is there a potential in concentrated leadership that has taken us up that could bring us back? And then are there any macro surprises on the horizon? We've already seen some of them that have been bullish. But the other thing we can look at is we can go out and look at seasonality as we do every single week when we look at the calendar. And I want to look at the calendar right now with everybody. So, as we turn to the calendar we've seen the calendar for August, but as we turn to the calendar for the week, it's looking like this. All right. It's starting to turn yellow. And what I mean by that is that last week we were seeing 70s and 80s in terms of bullishness to bearishness. Now that number's dropping into the 60s. And it's just going to get weaker. And what we're looking at right here are just ETFs. When you look at the stock market, it's downright yellow. But right now we're seeing today, coming into the day, 69% bulls, 31% bears. That's where we run out the week, when we run out from the 10th to the 14th. But here's the big thing. When I rescore these, when I rank these the way I like to rank them, then you know what comes to the top of the list? And it's coming to the top of the list. It was at the top of the list last week, probably be at the top of the list next week. We'll see. But it's the US dollar. The US dollar going out 60 days, taking us now to the end of October, is bullish. How often has it been bullish? How about 10 of the last 10 years? 10 of the last 10 years, we've seen the US dollar up between now and the end of October. We're going out 60 days. This is, if for those you don't know, the US dollar, or UUP, is a blend. It is a look at the US dollar versus foreign currencies. It's a basket of the world's major currencies. So when this goes higher, what goes lower? Those foreign currencies. What else goes lower? Commodities. What else potentially goes lower? The stock market, right? And we've seen patterns. This is, if history's taught us anything, the last 10 years, we have seen patterns in the markets where stocks and the US dollar go higher, and stocks and the US dollar can go lower. That's not always the case, but we have seen that happening as of late, especially in the last 5 years, when you have something like COVID that falls into the mix. All right. This is a chart of US dollar right now. I'm going to blow this up so you can all see it. And you can see here that I have applied on this daily chart Andrew's pitchfork. Right. Andrew's not a friend of mine. I don't know who Andrew is. I have a nephew named Andrew, but I like to use this indicator looking at possible points, low to high to low, to give me an upward range like you're seeing there. I also have turned on the velocity cones. These are probability cones that you see there at the end that project out into October. And if I were to take a projection, and I could go from, say, conservative to equal, we're sitting around that 28.5 to 29. That is 1 to 2% higher than we are right now. Let's look at 2% as that norm, 1 to 3% if we take the entire range. Well, down the middle, what's 2% worth? 2% is actually worth more than you think. Down here at the bottom, I actually threw the at-the-money call options on here. All right, these are at-the-money call options with a December expiration date. All right, trading around 63 cents as we came into this morning. Now, if this 28 call, if we were to get to 29 by December, not by the end of October, but by December, then we've got an option that could be worth $1 on something we paid 63 cents on. Not quite a double, but well over that 50% mark. Okay. There's one problem that I have with this option, and it's not that it's cheap or expensive, because it's actually not a bad price. The problem I have is that I'm looking at something that ends in December on a pattern that ends in October. There's a lot of extra time value in there that I don't necessarily need, that actually hurts the reward to risk ratio a bit. So that's the only problem I have when I look at the US dollar and I'm looking at options. Sometimes I can find the best pattern in the world in the stock market, but when I go and pick the options, there's just not something there that I can use. All right. So in summary, here's what I'm looking at here, folks, as we go into the end of our market update. All right. Number one, what I'm looking at my summary is that August tends to break seasonality in favor of the bears. Now, again, I'm not suggesting that we're going to have an all outright bear market. What I'm suggesting here is that if we're looking at this, we're seeing that there is a potential here. All right. There's a potential here for the stock market to wind down. Right. That's a possibility. All right. That's number one. Number two, right? Look at the at-the-money call options. They are cheap. But if you know me, I prefer to see an expiration that's closer to October. Now, finally, I've got a live event going on. All right, I have a live event going on that's going to be this Thursday. It's going to be this Thursday. It's going to be at 7 p.m. And what I'm planning on doing in this live event is I am going to get into the details of my August warning. I'm going to get into the details of what I see. And I've got 3 areas that I'm really interested in. I'm interested not only just in the US dollar and the currency instruments, but I'm also interested in much more than that. I'm actually interested in the metals and mining area. I'm looking at a potential area in uranium, of all places. Okay. If you're interested in joining me, then click on the QR code above or take a look in the comments section.